XRP is back in the spotlight after a sharp uptick in leverage. Over the past week, XRP futures open interest has jumped by more than $1 billion, climbing from $2.42 billion to $3.42 billion, around 40% jump. The spike in OI coincided with a price rally from $2.14 to $2.48, showing traders are betting big on XRP's near-term upside. Now, analysts are grappling to find patterns and explain this drastic jump. According to Glassnode's data, see chart below, this is the sharpest spike since February and now represents the highest open interest for XRP futures in 3 months. This signals that traders are opening new positions with conviction. When open interest and price rise together, it usually means new money is entering the market. That being said, it's always important to note the scale of the move. While XRP's price rose by 16% in the past week, open interest jumped 41.6%. This imbalance suggests speculative enthusiasm may be outpacing spot buying, raising the possibility of volatility ahead. The chart also shows this isn't the first time such a surge has happened. In February, there was a similar rise in leverage just before a short-term correction. This pattern means traders should remain cautious despite the bullish outlook. The surge in open interest aligns with growing speculation around an XRP ETF approval. Rumors suggest a decision may arrive as early as June 2025. As traders position themselves ahead of this, leveraged longs have soared. This speculation ties into a bigger and much wider trend of growing institutional participation. The approval of Bitcoin and Ethereum ETFs in previous years led to price surges and capital inflows, and XRP bulls now expect the same. And prediction markets also support this view. According to Polymarket, there's a 79% chance of XRP ETF approval in 2025. This market-based data highlights a growing belief that regulators are warming up to Ripple's case. Traders appear to be front-running the news by stacking long futures positions. The scale of the open interest surge suggests this isn't just retail-driven. Analysts believe larger players are stepping in. A billion-dollar increase in contracts usually points to deeper capital inflow. When open interest rises with price, it's a sign that new participants are entering the market with conviction, said a crypto derivatives trader. This isn't a retail-driven pump. It has institutional footprints all over it. While this rally seems strong, traders should remain aware of potential risks. Whenever leverage spikes, volatility often follows. If the ETF news doesn't materialize by June, overexposed positions may start to unwind. Moreover, divergence between price and leverage often precedes corrections. For XRP to sustain current levels or move higher, spot buying must follow through. If not, the market could see short-term pain before further gains. What is XRP? Founded in 2012, XRP is a digital asset created to drive innovation across the financial payment space. It is the native token on the XRP ledger, XRPL, a distributed, open-source, permissionless blockchain maintained by a network of peer-to-peer servers, known as unique nodes. XRP functions as a mechanism of exchange between two different currencies or networks and can be sent directly without the need for an intermediary. Think of it as being able to send cash directly to someone overseas without the need for a bank or payment processor to handle the transaction. The peer-to-peer nature of XRP makes it a convenient tool for bridging two currencies in a matter of seconds, not days. This saves time and money and simplifies the process of international transactions. Banks in various countries have also adopted XRP for routine hawala transfers. How has XRP performed in recent years? In the 2017 bull market, XRP reached an all-time high of $3.40. Since that time, several challenges, including wider market corrections and the Securities and Exchange Commission's (SEC) case brought against XRP, saw its price hit lows of around 15 cents in mid-2020 and 38 cents in July 2024. The months following the July 2024 low have seen XRP gain almost 600%. These gains are due to positive sentiment following President Donald Trump's re-election in November 2024, questions over the validity of the SEC's claims in its case against Ripple, more on that below, growing usage of the network, and hopes of XRP exchange-traded funds, ETF, being approved to begin trading in 2025. The recent developments signal that XRP could be entering an exciting new stage of growth, as usage and the promise of regulatory certainty combine to drive upward momentum. On January 15, 2025, XRP hit a 7-year high of $3.40, driven by a surge in meme coin trading volume on the network, anticipation over President Trump's crypto-friendly administration, and the potential for clarity over the SEC's case against Ripple as the leadership transition takes place at the SEC. Are Ripple and XRP the same? When talking about XRP, one might often hear it used interchangeably with Ripple. However, the two are quite different. Ripple is a company that provides a blockchain-based digital payment network for its users. XRP is the crypto asset that facilitates payments on this network. XRPL is the software ledger where transactions with XRP are recorded. The company has undergone multiple rebrandings over time to reflect changes in ownership or direction of the project. In 2023, Ripple acquired crypto businesses Medico and then Fortress Trust to support our existing lines of business, specifically in terms of improving the customer experience. Continuing the takeover strategy in 2024, Ripple bought out Standard Custody, a custody provider designed to service institutions. Throughout the business's evolution, one thing that has remained consistent is the ticker symbol XRP for its native cryptocurrency. How does XRP and the XRP ledger work? The XRP ledger. The XRPL consensus model is built upon a core principle. A little trust goes a long way. Unlike Bitcoin's proof of work or Ethereum's proof of stake protocols, the XRP ledger doesn't use mining or staking to validate transactions. Rather, it allows trusted, permissioned servers to create consensus on the network. These servers, or unique nodes, maintain a unique node list, a list of nodes that the network deems trustworthy. If 80% of nodes deem a transaction to be valid, a unique node can then proceed with validating that transaction. In the past, the XRPL has experienced out-of-sync issues, leading to downtime across the network. When one node on this list is compromised, the effects can spill over to other nodes, further slowing down the network. However, reliability has improved in recent times. XRP, the native token, the total supply of XRP 100 billion, was created and distributed to individuals and companies at the launch of XRPL. Unlike other consensus mechanisms, nodes do not earn rewards for maintaining the correct version of the ledger. There are some customers on Ripple's digital payment network, RippleNet, that prefer to send funds without a pre-funded account. Ripple makes this possible through their on-demand liquidity service. In this service, XRP, along with a pool of other digital assets, e.g. Bitcoin, Ether, Ethereum Classic, Bitcoin Cash, and Litecoin, is used to provide liquidity for these transactions. When parties have different preferred methods of sending or receiving money or use different currencies, RippleNet acts as an intermediary for their transaction. As both parties are using different currencies to transact, no physical money moves during the process. Rather, the transaction is conducted in XRP, which equals the value of the money being sent. The network also charges a small fee, in XRP, to complete the transaction, but it's minuscule when compared to other traditional international payment networks, such as SWIFT,